Do you want to be a swinger? Well, I do. Not like that. Let's talk about swing trading. Swing trading is one of the best ways that beginning traders can learn how to trade properly without developing bad habits later on. Sure, everybody wants to be a day trader. It is sexy to say, oh, I made $1,000, I made $5,000 in 5 minutes, and then I went back to bed. Okay, that's great, but then what happens when you don't have the skill to be able to time the market to make that day trading type money? Swing trading is going to be your best bet, because with swing trading, you're going to be able to make a lot of small wins that add up to a huge return. When other day traders are taking 10% profits, 25% profits, if you are in a small swing trade, you can look to make anywhere from 50% return, 100% return, 400% return on trading ideas that you have found, holding them anywhere from 1 to 5 days. I technically do a lot of overnight swings, and then my holding period is generally anywhere from 1 to 5 days, because that matches my personality. So you're going to have to find something that fits your personality. Now, stick with me to the end, because I'm going to tell you my special criteria for managing trades, and I'm going to share with you a little trading mishap that happened to me this morning that took me a little bit of time to get over. So, when you start out swing trading, the first thing you want to be is always in control. Paul Tudor Jones says, where you want to be is always in control. Never wishing, always trading, and always first and foremost protecting your butt. So with swing trading, you will have your entries established, you will have your protective stops, your stop losses established, and then you will be able to effectively manage your trade so you don't have a winner that goes back and then you end up at a break even and not taking any type of profit. Okay, so the first thing, where do you get your ideas? Well, I get my ideas from a great free site called FinViz. FinViz has a cool map function up here that allows you to see where the money is flowing across all different sectors in the S&P. I have mine set to 1 week performance. You can change this to anything that you want to see. So I generally go 1 month and then I go into 1 week. So if I look at the month, I can see the top sectors are healthcare, medical devices, drug manufacturers, real estate, utilities, consumer goods are high up. Home improvement is pretty high. Restaurants, industrials are pretty high. And the money is just bleeding out of tech, consumer electronics, semiconductors, financial services, and of course, communication services. So that's going to give you a good idea of kind of where to see like where the money's going. Then after we've done our top down 1 month analysis, I drop down to 1 week and I can see, okay, the money's still coming in here. It's not so much in industrials, but it is still flowing into real estate. It's going into utilities. It's definitely going into packaging. Beverages look good. Medical devices look good. And meta looks good. So after we figure out, all right, where's the money flowing? Now we're going to take our thoughts. So I know I can look at real estate, I can look at telecom, I can look at medical devices, I can look at utilities, I can look at any one of those sectors to find a stock that I want to plan my swing trade idea. And when I'm swing trading, I usually, 90% of the time, my position is a long position. I'm buying a call option on whatever security I'm trading. I do options and futures, but mainly when I swing trade, I do options because it's lower risk and I have a great upside potential. So going in, now I know where the money's flowing. Then I'm going to go to another free site that I love. It's called Bar Chart. And in Bar Chart, what I'm going to do is I'm going to select stocks, and then I'm going to go to price volume leaders. And I'm just going to click on that. You're going to have to ignore the ads because it's a free account. It just pops up ads. And then I'm going to hit percentage change here. And I'm looking to see stocks that are up maybe like 1%. Now, when I did this on Sunday, Abbott Labs was in the 1% grouping. So I made a couple of trade plans and ideas. I was looking at Abbott Labs. I was looking at Johnson & Johnson. I was also looking at Duke, but I realized Duke Energy had earnings and I don't mess with earnings, so I was going to wait till after. I was also looking at McDonald's and XLRE, which is the real estate spider ETF. And I was looking at Apple, but I kind of wasn't sure with Apple because tech, NASDAQ has been selling off like crazy, so I just didn't want to chance it. So once I find stocks that have about a 1% move up and they're either listed, they must be listed on the New York or the NASDAQ stock exchange. I am not doing anything that's on MX. I'm not doing anything that's on OTC. It's just something I don't do. You can if you want, but this is how I look for swing trades. So in looking at the trades, so the results that I pulled up on Sunday, I found Abbott. So let's go into Abbott and I can show you kind of how it looked Sunday when I was looking at it. What I do is I go out to the week and I'm trying to see what is this stock doing. Is it in an uptrend? Is it in consolidation? Is it in a downtrend? What's happening? And so we can see here, Abbott had a downtrend and then it hit a period of consolidation right here. And then it had this really sharp bull move that was pretty much twice the volume of the prior week, and it was straight buying volume. So Abbott had 50 million shares transacted over the course of the week. So this gave me a pretty good signal to get interested in Abbott. Then I looked at where Abbott had been, because the biggest thing when you're planning your trades is you want to look left. You want to look to see where your security went and where it could possibly go again. So I looked at and I saw, okay, we have a resistance level, and I call these levels of interest, most people call them resistance and support. You can call it whatever you want. So I was looking at Abbott hitting a ceiling of about 120.95, and then if it made it past that, we were looking at 124.34, and then 129.78, and then possibly even getting to the October high, which was, let's see, with that October high, 142.49. So I felt fairly good about Abbott giving all of my analysis that I was doing, right? So then I went into the daily chart for Abbott. So one thing I like to do is I like to do the prior day range. I like to mark off the prior day low, the prior day high, to kind of give me an idea of how the stock moved and where I am looking for price to either retest and continue upwards or possibly reverse, and then I need to get out. So one of the things I do is I have this little indicator here, and it is called the average true range indicator. It is free in TradingView, and all you have to do is just select that one, average true range, and it will show you based on the time frame you're on how the stock or index moves, or whatever you're trading moves during whatever time frame you have it on. So since I have this on the daily, we can see here that Abbott on Friday moved around 2.69 points. Roughly, if I pull this back and I just kind of find a midpoint here, I can see Abbott moves, like I'm going to say conservatively 2 points a day is what it does. So we know that, okay, if I'm looking for a 2 point a day move, in order to get back to here, 115 minus 111 is 4 points. That could take 2 days, or it could take 5 days. I don't know. So that gives you a way to start to see how price actually behaves. And that's what you want to do when you're figuring out your price levels of interest, is you want to use that average true range. You want to use a daily range to plan out your entries and exit. So my next thing is I then start planning out my trade, right? I want to see what Abbott did. So I'll go down to the 4 hour, I'll take a look, and I'll see that, okay, on open on Friday, it had this wicked doji. Like, that was crazy. And then it just kind of consolidated and went up. So, okay, I'm looking at that. I'm thinking, all right, maybe if it can get past that again, it has a chance to go back up. The other thing I noticed on the daily chart here was we had a gap. So I like to see these gaps get filled. Now, not all gaps get filled, but if this gap starts to get filled, there's a high probability that it will get filled to completion and we can have a nice move back up. So now what I've done is I have marked up my gap right here. I have now figured out where I want to enter. And the reason why I enter here in this area is I am looking to see if we revisit the prior day open. So I kind of have an entry that I'd like to take here, and I'm thinking maybe I'll do another entry like around here, and then my protective stop where I am no longer interested in this as a call. I am looking to put it right about here. But if I end up getting in here, I'll give myself more room, because sometimes what happens is price will go through the prior day low and then it'll reverse back up and keep going again. So you kind of have to watch out for prior day highs and prior day lows, because if you see price getting near them, odds are it more than likely will take out one or the other and then either continue or reverse. So to figure out where I'm going to place my stop loss, so I was looking to see, all right, if we go pretty much to half of Thursday, right? If we go here, I was going to give myself about a 2 point stop loss, which would be the average daily range that Abbott moves. So I'm going to grab my little price range here, and then I'm going to say, all right, 2 points. Let's do 2 points right here. So my stop loss would be here, where I would have my trade idea invalidated. So that's how I assign my risk. It's all about giving myself enough room based on how the stock's price action moves on a daily basis, because we're planning our trade on the daily. We can go down to the 15-minute, the 5-minute to execute. That's not a problem. But if you're planning it on the daily, you don't want to go any lower than the 4 hour to make your ultimate decisions. Okay. So if we look at this 4 hour chart here, we can see that our trade idea is definitely invalidated if it gets below this 106.65. because now we will have taken out Thursday's low, and odds are this could just be a reversal to go even lower. So you just want to keep that in mind. Then what I would do to manage the trade, and here's where I want to tell you that you can do everything right. You can plan out your risk reward, you can plan your entries, you can plan your exit, and you can still not make money. So this is a game of probabilities. You have to be prepared that anything can and will happen, and you can't get attached to the outcome of one trade. Remember, you're going to take thousands of trades. So it's those cumulative trades and creating a process that you can stick to and that feels good with you, that you are going to become a winning trader. Now, the other thing I want to say is when you are trading with options, because I was looking to get call options with Abbott, please, for the love of the market gods, get a contract with some time on it. Do not, if you are starting to swing trade, get a weekly contract that expires on Friday. What if this move doesn't happen until next Monday? You've lost your capital. Now you're frustrated, you're demoralized, everything's gone wrong because you didn't give yourself enough time, because you don't know when the market is actually going to do its moves. Okay? So get a contract with at least 3 weeks on it. Even if you're holding this for like 3 days, get a contract with at least 3 weeks on it. Get it as close to the money as you can. And this way you are not subject to massive volatility spikes that can take away the intrinsic value of your contract. You're going to be sitting in a good spot where you're doing what Paul Tudor Jones says is, first and foremost, protecting your butt. So here is what I wanted to show you. Let's go down to the 1 hour. This is why I have the clown right here. He is there for a reason. So let me make this a little bit bigger. Let's get rid of the volume and the ATR. We don't need any of that right now. Here's what I want to show you. Look at what 930 brought. It brought the clown car. Abbott ran up. It ran up from the open of 110.46, ran all the way up to 112.03, rejected, and came crashing back down to a low of 108.65. So when I say stay out of the open to initiate trades, I mean it, because you will end up getting hurt. Okay, you don't want to be in here when this is going on. And I'm going to tell you about that in a minute. So here you can just watch and see. So here we got an entry here, we got another entry here. That looks good. So now let's go to today. What actually happened today? Let's go to the 1 hour chart for today. Let me get out of replay mode because I wanted to hide today so you could see. All right, so today, look what happened on the open. I had my trade plan. I was ready to go. I had my option, strike prices, and expiration dates that I wanted to get in. And I saw this happen on open, and I said, you know what? I'm going to wait, because today was a massive sell-off. I mean, we were down across the board on everything massively. It was insane how bad the market was down today. It was like a flash crash today. So here I saw, all right, we're going back to my call entry. We're not holding anything right now. We could possibly be going lower. So even though I had my trade plan to get in at 108, to get in at 109, which I could have easily bought, this does not look like a strong buy to me. I mean, ideally, I want to wait and see us at least get back here to 109.76 to buy. Maybe if it looks like it's holding after maybe a little period of consolidation, I'll look to get in around this 108 area to maybe give it like a little nibble to see. But other than that, I'm going to sit on my hands and wait. Okay, so that's what I would do for my entry. Now the other thing is, since we talked about this moving around $2 on a day, as you are in your trade and as your trade is going in your favor, you're going to need to protect your gains. Okay, so what I recommend is doing the same thing. Look for like about $2, since we know this is the average range, right? I'm going to say $2 here. So then as my price goes up, I'm going to now move my stop. So once my stop has hit its first ATR level, I move my stop from here to break even. And guess what? If I get knocked out, no sweat. I'll just get back in. It doesn't matter, right? Because I haven't put myself in a bad position. Okay, I was up. Now I got knocked out. Just get back in. Keep your alarms on so that you can easily know when to get back in if you have to step away from your screens. And the way you do this is you just simply set a simple alarm on TradingView, add an alert, and you can set it for every time, and then go ahead and name your alert. So you know, if you're not setting alerts to let yourself know when you need to enter, let yourself know when you need to get out, let yourself know when to move up to protect your gains, you're doing yourself a really big disservice. So as I move up, let's say I move up like another 2 cents, right? At this point, once I get past this level, and this is just my arbitrary level based on how the price moves, right? I will then bring my protective stop up from the break-even entry, and I'll bring it to the first level here. So this way, I am at least getting paid something. If it reverses wildly or something, God forbid, I don't know, happens that we get another crazy sell-off, I've protected some of my money, because at the end of the day, if you're putting in this time, effort, intellectual energy to do these trades, you've got to get paid for something. You can't just walk away with zero. If you can, you must be a Buddhist monk, but I cannot do it. I have to get paid something. So as we move up further, I'm going to also adjust my stop. Once we fill this gap, I will probably, I'm not going to lie, I'll probably choke this trade a little bit. And what I would do at this point is, let's say I had 3 contracts in Abbott. What I would do is I would move 2 of them. I'd move my protective stop on 2 of them to here to basically take advantage of this gap fill. And then I would leave 1 at like a break even. Like I would, like, not even a break even at that point. I would leave 1 at probably level 2 down here, because if it's reversing all the way back, odds are it's going to come back. So I would like leave this one at like 2 ATRs down, just to give it room to see if it can actually get up to this level and then possibly to the next level. So I'm always protecting my gains. I'm always making sure I am protecting my butt. Now, this is a little story time that happened to me this morning. Happened to me on AMD, and I saw AMD like pretty much looking like it was gonna sell off. So on Friday, I entered in a short position. I had a short swing. It was basically an overnight swing. I wanted to get out today. I entered in. Okay, so I'm on the hourly. Let me go down to the 5 minute so you can really see what I'm about to tell you here. So let's see here. Let me make this a little wider. little bigger. All right. So I saw AMD did this. It ran out of the gate. Then it gave it all back. And then it came back. Then it just started like hitting this resistance level here, right? It started hitting this and it couldn't get past it. So my thought was, based on the bigger time frame analysis that I did, I was like, okay, we have a strong possibility that AMD is going to sell off probably over the weekend into Monday. So I entered at around, I got filled at 136 on AMD. Oh man, this is still painful for me to tell you right now. It happened this morning. So I'm on Central Time. And this morning I woke up, I checked the markets like I always do. I looked at everything, I looked at my positions, and I said, oh, I was in a great mood because I love Mondays. I was waiting for the market to open. I tried to log in to my Thinkorswim, and I was not able to log in to Thinkorswim to close out my trade. Now keep in mind, as of Friday, end of day, I had my protective stop in place. So because this trade was already up, I was filled back here at like 136. I was already sitting in profit, like around a 30% profit or so at like 131. I had my protective stop set to break even, so I would not lose any money on this trade. But I didn't know where we would go, so I couldn't really say, okay, I'm going to set a take profit here on a Monday morning and have it as a limit sell, right? Because AMD moves about 7 points a day. So had I at 130, had I at 136, yeah, had I at 136 moved my take profit, moved my protective stop down to 131, well, that would have knocked me out of my trade. So then and I didn't know, had I moved it, let's count down another 6 points. So from 131 minus 6 is 124, right? No, 125. Had I moved it down 125, okay, but then I would have been missing out on this 122. I simply thought I was going to exit my position this morning. I had no idea. So 8:28, I'm trying to log in. I cannot get in. Look at what happens. I'm taking you down to the 2 minutes so you can see the madness of AMD. I was up 400% in my call positions. This would have made my month, this trade, okay? I sat on the phone with Thinkorswim trying to get their technical support, trying to get their customer service, trying to log into the website, the app, my phone. Nothing worked. So from 8:28 trying to log in to just exit my positions immediately, because I know how AMD moves because it's something I trade a lot. It's a little wild. So I just wanted to get out, right? So look at this. So at 9:30, it runs up almost 4 points right there. So I wanted to get out. Thinkorswim customer service did not pick up the phone until right here, 10 o'clock in the morning. That's how long it took them to get my phone call, right? So now I went from a 400% gain to barely a 20% gain. I ended up selling my position. I closed it out. It was like, I think it was like up 20% when I closed it out, like around here or something like that. I was beside myself today. I didn't take any other trades today. I just kind of sat on my hands because I was so pissed off that I couldn't believe this technology malfunction really cost me a lot of money today. And through no fault of my own, nothing like that. So I'm telling you all of this to say that no matter how good you plan, no matter how good you execute, no matter how many protective, measures you take, there's always an unknown event that can happen. So I want you to be prepared for that. So today I moved all of my money out of Thinkorswim and I put it back in my old E-Trade account, and that's what I'm going to be using for my options account going forward again. So wanted to share that with you. Hope this helps. Get into swing trading. Don't think that you have to trade daily and sit there in front of the screen for hours and hours and hours, because the beauty of trading is that the market will do the work for you. You do not have to sit here like it's a day job and do it. Wanted to leave you with that. If you like this video, please like and subscribe. It helps me greatly. And I look forward to making more of these videos for you. Thank you.